Good morning. It's March 20th. We obviously have a big week ahead of us, so let's get right to it. First, let's break it down. We've had the most aggressive monetary policy in 40 years with higher rates and QT, so that's quantitative tightening, making things tighter, versus QE, which is easing. We've had ecosystems of cash-burning companies in a world of alternative investments, including crypto and fintech, that have been going down for the past year. As you know, we've had several banks going bust and or being sold off in pieces and or just being sold off by other countries. We have tighter credit conditions, so that means it's going to be harder to get those loans for companies and individuals and other banks. We have more regulation coming down the pike. Also, higher unemployment, slower growth, more defaults we are expecting, as well as higher high-yield spreads. And wait for this. You hear it here. In the next year, probably some more busted commercial real estate. So what are we looking for the Fed for Wednesday? The Fed has to choose between price stability to fight inflation and financial stability to buffer individuals and companies in the financial industry. It's going to be really hard. There's really no good choice here. So we're going to be watching the dot plot, which now points to about a 1% reduction in rates in the future. We're also going to be listening to their QT messaging. So the government expanded its balance sheet by just under $300 billion in a week. That's expansion, not tightening. And they're saying that they've been, looking to tighten for the past year. So if we remain on a path of tightening, we're going to be headed for a recession and a credit crisis sooner rather than later. So that's fun, good times for you this Monday morning. Let's get to the dashboard at Longbow and take a look at what you should be watching here this week to figure out if you do need to do anything. Some ETFs, index, things like that to be able to look at to say, okay, are we at the high ends of the trading ranges, low ends of the trading ranges? What's really going on? Because obviously we're going to see some volatility this week. So what you see here is whites in between the red and the green. That means that everything seems to be in the middle of its trading range. So today's the SPY is up. People are happy about this UBS deal getting CS. We're in the middle of the range. You can see we're near the top end of the range in tech. So as people are saying, okay, we're heading towards problems, the Fed's going to have to be a little bit more dovish. So long duration assets are going to do better. You've seen tech rally. You're getting really near the top end of the range. So you're looking at here, call it a 2.5 to 1 downside in that. You've got Japan, which is technically more of a safe haven, still heading towards the top end of its range. So you've got a little bit more downside in there. The EFA, so that's developed markets outside of US, that include Europe as well as PAC Asia. It's just slightly worse than, -1 to 1. But you've got, it's a little bit above the middle of the range. The TLT, so that's called a long duration, 20+ year Treasury ETF, kind of stuck in the middle of the range. The short end of the Treasury curve, the SHY, is in the middle of the range. And here we're at the volatility index, the VIX. Guess where we're at? The middle of the range. So people are kind of saying, we're not sure where all this is going. We're watching it here. But remember, we've been showing you in the last few weeks what's been happening. So you've had maybe more narrowed ranges prior to the recent period of banking instability, but now you see a big blowout of ranges. So even if you're in the middle of range, that range has been huge. That doesn't stay like that forever. Once there's more data, once there's more certainty, you're going to see the range narrow, but that can take you to an upward trajectory or a downward trajectory. And right now, people are saying, hey, we're in the middle of this bet. We're waiting this out till we get a little bit more data. So you could see higher moves because when this narrows and moves, the ranges, you tend to get the capital flowing in that direction. So here's some areas that we would look at. We'd also maybe look at the UUP. So that's the dollar ETF, GLD, gold. And just as you know, all you do is you type a ticker in right here. It's as simple as this. It adds it, puts it at the top. So you're near the top end of the range for gold. Again, a safe haven. People have been worried. And if you want to add the UUP, again, this is all you do for those folks who are newer. There you go. And if you want to move things around, so the dollar has been declining relative to other currencies, so that's lower here. So depending on whatever trade you want to make, or you want to just see what's happening in the world with some big picture ETFs and indexes, right here on Longbow makes it easy to do. Talk to you tomorrow. We'll keep you up to speed on all the major news and events and how it's affecting your portfolio this week.